Hey everybody, hey, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. Look, it's a new week, new start, but it's the last week of October, and I think it's going to be one of the busiest ones because we have four major central banks delivering their key interest rate decisions, we have US leader jumping around Asia making deals. So yeah, there's a lot of things happening. So hopefully you'll enjoy this session. I'll talk about some of those things, and yeah, I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen, the 27th of October, 2025, and yes, welcome. As I said in the intro video, welcome to the last week of October. October was an interesting one, and I think we will be I think we'll be finishing off the month with an even more interesting week. Look, there's a lot of things happening. There's a lot of events. There are a lot of events, and there are political things, shifts, and here and there, trade deals done everywhere. Look, about all this in a moment. Before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. In the meantime, I can do my usual good morning in the chat room. Good morning, everyone. There we go. Yes. So good morning, everyone. I hope you can all hear me and see me well. Also, before we go any further, as always, let's quickly have our mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. And also, probably something a little bit more important, at least to me, it's the big webinar that I'm going to be having this week on the 30th of October. So tune in. It's a closed one. You need to register for that one. Basically, it's the third episode in the series which I'm doing, where I'm picking up on the top used technical indicators for traders by traders, kind of applying. I'm talking about it a little bit, and then applying it in real live market action. So putting live trades on our demo account, basically to understand if we actually can trust this indicator and if we can actually make any good of it. So you can find the link in the description of this webinar as well, so feel free, or you can just go on our website and go into learning and then click into webinars right here. So also, actually not also, let's straight away, let's jump into the economic calendar, ladies and gentlemen. Monday, New Zealand is celebrating its Labor Day, look, in general, what to watch out for this week? Probably, let me go straight into the topics. So look, Wednesday, we'll kick off with Wednesday. Why? Because we have the Bank of Canada delivering its interest rate decision, and Bank of Canada, yes, 2.25. We're expecting a cut together with the Fed, because the Fed is delivering its rate later on, also reducing the rate by 25 basis points. So look, coming back to Canada, it's an interesting moment there with Canada, because look, Canada's inflation right now it's okay. It's 2.4. It has risen significantly, but it's still okay. Look, before it was around just below 2%, right? For I can see here for 5 months, it has been below 2% since April. But in September, the September number shot up very quickly. The headline year-on-year number shot up, and it came out at 2.4. The forecast was at 2.3, something like that, 2.2, 2.3. and shot up to 2.4. Now, the bank is still doing the rate cuts despite the hike, because I think that still, maybe they'll say, okay, we had a similar situation back in February, right? In January's when January's inflation came out at 1.9, the February inflation just shot up to 2.6. That was like that was also a moment, and then it kind of started declining. So maybe it's one of those moments again. Maybe it's gonna drop back in the next, during the next reading. So that's why I think that they're still comfortable in doing the cuts, maybe even actually dragging the rate all the way to 2%. So yeah, let's see what's gonna happen here. So for now, the expectation is for a 25 basis point cut. We're gonna keep an eye on that one, and then yeah, we'll see. Maybe if inflation does continue to rise, and if we look at Canada inflation, let me just, I think it's going to be IR year. There we go. Yes, that's the one. That's what I'm looking at. So this is what I'm looking at. So if we somehow see this number here continuing to rise towards 3%, maybe then even crossing 3%, then yes, then that's a little bit of a problem. Now, somebody might say, oh, but why? I mean, if we have been at these levels before, why is suddenly 3% such a big deal? Again, it's not actually direct like for like. You compare markets. Here we had a moment where when there were some supply shocks, and the conflict in Ukraine started off. Then it kind of started easing. Inflation started dropping, and actually, I wouldn't say it was a gradual drop. No, it was a clear move to the downside. So maybe somebody might say that, hey, actually this move here has been something of a force majeure. So long story short, when everything stabilizes and kind of goes back to that norm of the fluctuations are not that big, then any move like higher becomes kind of a concern for the central bank. Anyway, look, for now, what I'm going to say here is this, that if we do see Canadian CPIs, the year-on-year headline, core pushing higher towards 3 or maybe above 3, that could be a concern for the Bank of Canada to, just in general, a concern for the Bank of Canada, and they could stop, with the rate cuts. I think that there is a possibility maybe dropping it to 2%. Let's see, but again, I don't think that they're gonna drop. Below 2%, something like that. Anyway, but things happen because again, looking at the situation right now, we're seeing a little bit of a political dispute between the two countries, Canada and U.S., and I think it was caused by. No, I don't think it was. It was kind of triggered by the little ad that Ontario government did, where they expressed that they used Reagan's voice, who's kind of been saying that that the tariffs kind of maybe they're beneficial in the short run, but in the long run they hurt even both sides. So, and yeah, the White House didn't like that, and I mean, it's we can all debate that, of course. It's probably another show for this one. But is this something wrong? That did they say something wrong? No. But in general, who initiated the tariff war initially? So it was the U.S. So kind of it's you can expect that other side will always retaliate with something. Anyway, let's see, of course, how all this is going to play out. But of course, then on Wednesday, the big day is for this bank here, the Federal Reserve, and we know that we are expecting to see a cut by 25 basis points. Let me refresh the Fed Watch tool. It certainly is going to be almost 100%, yeah, that they're going to do in October. Cut of 25 basis points. There is a small chance that they're not going to do, but to be honest, looking at the CPI, the US CPI data that finally came out last week on Friday. By the way, I did a video on it. So let me just show you what I'm talking about here. So if you go on our website and you go into videos, you'll see that this little video right here. I talked about the US CPIs and how if it's above 3%, let me actually just show you what I'm talking about. If it was above 3%, then it could be a very interesting moment for the US dollar. Now look, where's that number? Where's that USA CPI? There we go. Year-on-year number came out at 3%. The forecast was for 3.1, and the previous was at 2.9. Core rate 3%. There we go. Yeah, the expectation was for a 3.1. So we have a very interesting moment, in my opinion. So we know that when the numbers came out, the stock market rallied. It was a risk-on moment. Everybody was like cheering that it's like, yay, great. It's like not above, forecast and everything. And in the core situation, even it's like, wow, it's great. It's like even below, like, oh my God, like inflation is under control. But the problem is that, look, the headline, excuse me, the headline is still above the previous 2.9, and the thing is that the headline crossed into this different stage right now. So let me just show you what I'm talking about. So yes, this is where the interesting moment came in. We're now jumping back into 3%. Last time we were here at the beginning of this year, and where the January number was at 3%. So then we drifted lower. Now we're ticking back up. Now, specifically with this chart, I talked about it, and I several times already talked about it. I said that if we would apply technical analysis on this chart, then we have a strong decline and then a gradual decline. Then kind of it has a tendency, it has this pattern. Such a pattern has a tendency to pop higher. And well, again, it's a wrong way of looking at this. Of course, please don't do that. It's just for fun purposes. But in general, there is a moment that there is a chance for inflation to pick up higher. So yeah, the stock market enjoyed it on Friday. We saw major moves to the upside. I'll pick up on the indices in a bit. But what's interesting as well, that the US dollar, despite this kind of situation, if the stock market rallied and it's thinking that, oh my God, I'm enjoying the the inflation numbers, then the US dollar should have fallen off the cliff. But no, it has not. And I'll talk about this in a moment. I'll have my chart in front of me, but this is where I keep on saying, like, you take everything with a pinch of salt, and not everything looks like rosy. So for now, yes, we're watching this interest rate decision. We're, of course, but it's not probably the interest rate decision that's going to be the more interesting part. It's going to be the Fed press conference after that. So probably don't expect much much movement from the during the announcement of the interest rate. Keep your eyes on the Fed. Keep your eyes on Jerome Powell and what he's going to say during the press conference, because what we're looking for is, in his words, like, are we gonna get more cuts by the end of this year or not? Or actually, we're sticking to 2%, or sorry, 2%, two cuts. In my opinion, I think that we're sticking to two cuts. I think that we're gonna stay. I mean, I don't think that they're gonna go. He understands that there is a potential problem with inflation, and he doesn't want to fuel also with all this like cheaper lending. He doesn't want to fuel all this AI thing, which kind of could cause a bubble and could explode eventually, because again, everybody's financing all these different deals with AI. Like, where is your money coming from? Now it's like, it seems like corporate bonds are not enough. It's big banks are not lending out, because again, everybody understands, like, where, like, you cannot do that. You're going to collapse, the system. Now, okay, we'll shift to private equity. There we go. And now you're getting everybody involved in this whole AI thing. And when something like this is happening, I'm sorry, you can call me a pessimist, but when there's way too much exposure like that where into lending, and where the final result is not even known. Yeah, okay, maybe in the future it's going to be like a big thing, and to be honest, all the machines are going to eat us alive and everything like that. Yes, great, right? That's the result, But Uh, but at this point, you don't have the kind of the results or something. Yes, you have a few things here and there, but how economically worth it, or how economically beneficial it is. Yes, we are seeing some companies making cuts right now, because of AI, because they're implementing AI. So we don't need, jobs. We don't need those some entry level white collar jobs and blah blah blah. And and that's why AI is gonna, substitute all that. So, but then that labor force needs to go somewhere, and then you're gonna basically those people are going to be without food, and you're going to create a problem. You're creating another financial crisis in a way, because when people are, let's say Amazon right now is cutting around half a million jobs, yeah, worldwide. And these people will have to go somewhere, where if they cannot find a job, then sorry, this is, even like, who's going to buy your services? Unless the whole goal is to create more, to diminish the middle class and create more poor people, then maybe then that's the case, But anyway, there's a lot of things, a lot of debates. But in terms of right now, short term, with central banks, and like I said, with the Federal Reserve specifically, yes, I think they're going to go with the current cuts, just like here you go, White House. Just back off from me. I know that I'm leaving next year. Just I'll give you the two cuts, whatever you want. But of course, it's not enough for them because they want more cuts. But still, here you go. But so that's why I don't think that they're going to be like more cuts or something. That would be really crazy to me, to be honest, if we would see more than two cuts by the end of this year. It's already a lot in my opinion, but hey. Anyway, who am I to say this? Anyway, going further, Thursday. Going Thursday here, we are getting the ECB. We're getting sorry, Thursday. Before the ECB, we're getting the BOJ interest rate decision. There we go. So initially, at the beginning of this month, I already several times said this. In the beginning of this month, we were expecting a 25 basis point cut, but then the new leader, Sanaya Takaichi, won. She's in favor of cutting rates. The BOJ wanted to go and hike rates in order to kind of keep control over inflation. So where's that? Yep, there we go. So we can see that their inflation started kind of ticking back up again. It's a minor move. I think they will remain data dependent, but if this is going to start picking up here very rapidly, going back above 3%, I don't know if Sanaya Takaichi will be able to stand her ground on this. Like, unless, I don't know, there's going to start pouring money or something like that into the into the economy. However, we know that what that could lead to. So yeah, it's going to be an interesting one. I think that what's going to be interesting also, if there will be some commentary from the BOJ about this. Why are they doing it that way? So we'll see. And then going further, ECB interest rate decision. But again, once again, we know that we're not going to get a rate cut or hike, or actually specifically more cut. I think that the bank is now on pause with that. But really what's going to be interesting is going to be the words of Christine Lagarde. I think she's going to be very, very calm, very one-way traffic, like in terms of she's not going to say much, like she's going to try to remain vague as possible. They will remain data dependent, just to kind of like back off everybody. I don't want to deal with this right now, and just we'll keep the rate still close to 2%, but not going to drop it below 2. So yeah, these are the two banks. We have in different numbers in between. There's a lot of economic data coming out. So for example, today we're getting in a bit the IFO business climate number. Yep, from Germany. So yeah, then during durable goods orders coming out from the US. Tuesday we're gonna get the new car registrations in the EU, Germany, GFK consumer confidence. We're going to go into US, so we're going to have the CB consumer confidence figure, Dallas Fed Services Index as well coming out. So yeah, busy day. Australia inflation numbers. Going to be quite important to see actually, because inflation rate year on year is expected. Look at this, from 2.1 to 3. Boom. The monthly CPI indicator is okay, a little bit on the moderate side, but yeah, the inflation rate Q on Q, we're expecting quite a decent up move as well, from plus 0.7 to plus 1.1. Consumer confidence in Japan, UK, we're going to get some mortgage numbers. Then we're going to jump into the US. We're gonna get the every week which we're getting the MBA 30-year mortgage rate. So far, it has been on a kind of a control moment. It has been on a decline. I think it's at the moment, judging from this, it looks like more of a buyer's market right now rather than a seller's market. I might be wrong, but certainly, yeah. Interesting times. Then, of course, like I said, those central banks are delivering. Thursday in the morning, we're getting Japan, and then from Europe, we're getting unemployment numbers from Germany, and also some inflation numbers from Germany as well. So keep that in mind. Then we have the estimates from the EU, the GDP growth rate estimates. USA, a bunch of data. Now look how many jobless claims we have piled up already. I don't know when they're going to come back. There at the moment, there's no sight, and to be honest, I don't think that they're going to come back, into action. I mean, they're going to come back from the government shutdown, because look, October has been a big month in the U.S. deal wise. Everybody's making these deal companies. I'm not talking about like even companies like nvidia's, OpenAI's, like all your AMD's, Intel's, and Oracle's. So everybody's doing these AI deals. You're trying to also do the deals between the countries. So it seems like they deliberately went into government shutdown so that in order not to get the economic data, which could be a little bit devastating and could push the stock market lower, and then all your deals are not really presented in a very positive way, in a way. So it's it's a debatable theory, of course, but certainly it seems, at least to me, like that but when these job numbers are going to start coming out, I think that's where it's going to be a shocker. Now we're getting closer to the next NFP already that should come out. We didn't get the September number. I don't know how we're gonna get the October number. And the problem here is that these backlogs are also a little bit negative. If I can actually use the word a little bit. So it's going to be negative in terms of, and the most importantly, how credible that data is going to be, because there is already, like I said, a lag. Anyway, there's a lot of issues. But at the moment, they're trying not to overshadow all the deal making with these labor market issues in the U.S. So let's keep an eye on that one, of course. And then Friday we get the Tokyo CPIs. We'll keep an eye on that one, and retail sales and employment rates. So basically, a little bit of a data dump from Japan. Australia, PPIs coming out. China, NBS manufacturing PMI coming out. It's kind of expected to remain in contraction territory. Germany, retail sales, European Union, flash CPI numbers. Then you're getting your Canada figures, GDP monthly, GDP month on month, GDP month preliminary. So these are for different months. This one, I think, is this one's September. This one's going to be October. PCE, yes, the PCE number seems to be coming out from the US. Yes, the core and the headline PCE numbers, another inflation metric, the Fed's beloved one. But that's going to be already after the interest rate announcement on Wednesday. Again, the question is, how credible that number will be. Anyway, let's jump, ladies and gentlemen, into the stock market, because that one is rallying. Nikkei here, Nikkei rallying like crazy, pushing higher. Look, I talked about this. If you remember last week, I said to you that keep your eyes on that 49,946 zone. If that gets cleared, we're going to aim for that psychological 50,000 zone. But I think that now it's like, yeah, it's just a little pit stop. So is it the 51,000 that we're aiming for right now? I mean, I don't know. We'll see. Crazy movement here. Looking at the monthly chart. Look at this candle. Look at this monthly candle, ladies and gentlemen. This is just wow. We have been seeing rallies since April. Nikkei has been rallying since April. Honestly, the higher you fly, the harder you fall. But yeah, this parabolic move again. Whenever I talked about this about gold and silver. Look what they're doing right now. They have corrected lower, but I'll get to the commodities in a bit. So this one right now, Nikkei, yes, great result. I think the market is loving the fact that Sanai is not gonna go for rate hikes. Well, I mean, it should not be her decision, but we know politics. We understand how it works. Like how influence works, and certainly, initially the BOJ wants to go for a hike, but then Takaichi wins, and then suddenly BOJ, oh, we're not gonna go. We're going to meet somewhere in the middle. We're not going to do neither a cut nor a hike. There we go. The stock market rallies. Everybody enjoys it. Takaichi looks great because when she comes, look, the stock market rallies. She's amazing. Usual politics, basically. But again, these consequences that could lead from it. So short term looks good. Long term, whenever I look at charts like these, to me, this looks like a little bit bearish. I'm not saying that you need to go short right now. It's still good, could go rally, could go higher, but certainly it doesn't look very healthy. And look, sorry, the word healthy would be wrong here to use. I wouldn't say it's like something that you need to start considering buying in a way. Because again, if you missed it, fair enough. But certainly it looks a very strong move already to the upside. But look, long story short, if we start falling back below the 50,000 zone, I will start considering a little bit of a move to the downside. Of course, Shanghai Composite rallying. Why? Because it's enjoying the moment, and there's positivity that the two leaders are going to be meeting, and they're going to be doing a deal, or should I say, look. The deals are done this week already prior to their meeting. They're just going to be signing those into effect. But in general, the negotiations are happening right now between Besant and his Chinese counterpart. Sorry, can't remember the name, but yeah, those two are meeting and making deals. So yeah, look. Long story short, from the technical picture. I talked about this, and I said that we have cleared this downside line, taken from the highest point of 2007, where we then crashed after that. So we rallied nicely, and we continue to rally. And yeah, the question is right now, are we going to stay above this downside line on a monthly chart? So far, it seems like yes. Also, with Chinese Shanghai Composite, we have been rallying since May on this one, and we're approaching a key area of resistance, which is around that 4,006 zone. So we did we fell shy by hitting that 4,000 zone. That's the highest point of August of 2015. Certainly it's far from all-time high, but it's a key area. So we're currently flirting with that psychological 4,000 zone. I think that there could be some more upside to come here. We could see another like parabolic. Basically, I need a parabolic move, and then I'll see, possibly I'll examine the possibility for a correction back down. Dow Jones Industrial Average, new all-time high on Friday. There we go. Everybody's loving the news with the deals and everything, and everybody's into that. And also the CPIs, which kind of came in, didn't meet, came in below their forecasts. But as I said to you in the beginning of this video, that look, we had a moment where the stock market rallied. the US dollar did not really fall off the cliff. It actually held somewhat. I'll jump into DXY and actually let me show you DXY straight away. It held somewhat. It drifted lower, and look at this daily chart. Look at this beautiful move. Tested the 100-day EMA, found support, rebounded, and now we're still holding above that 100-day EMA, shown as the blue line. If we're going to continue to trade above that, then yes, I'm going to aim to the upside. So what I'm thinking here right now is that given that we had a strong rally in the stock market, but at the same time we had a move on the US dollar side, kind of it held, and now it's showing willingness to go higher. Maybe the market will come to the realization that yes, the CPIs came out lower than the forecast, but still they're quite high. They're further away from Fed's inflation target, which is 2%. So now it's like around 3. So what gives? And that's what I'm saying. That's why it's I think that where it's coming to the point where I think the market starts to understand that rate cuts, those are right now planned, but they're already kind of a given. And will there be more cuts? And this is what they will be listening into the during the Fed press conference. And what will Jerome Powell say? Because if he's going to say that I'm not seeing like more cuts in on the upcoming future in the new year, then that could be, like I said, that could be a blow for the stock market, and we could see the US dollar rallying. To be honest, look, I said to you last week, the week before that I'm getting slowly a little bit bullish on the DXY, on the US dollar index, but only short term. Only maybe, let's say, closer to this, like from now till, December or something, beginning of December or something like that, because you need to please the US consumer. You need to make their dollar a little bit more, attractive, and with a little bit more buying power. And if there are going to be holidays, if a lot of them are going to be traveling to Europe or somewhere else, and now your dollar is not very, doesn't fly far, you're going to blame the current administration for devaluing the dollar that much. So you need to give a little bit something to the people, and there we go. Maybe going into the holiday period, we're gonna see the US dollar kind of picking up the pace a little bit, and then we're gonna see a reversal back down. Again, theory. This is just a theory. This is just something that I am considering, so we'll see if this is correct or not. Again, I might be wrong. So looking at the other indices, S&P, yep, new all-time high, beautiful clearance of the 6,764 territory. NASDAQ as well, boom, to the upside, cleared this barrier, the 25,200 zone. So yeah, look, I would say this way now, if on NASDAQ, if we do remain above the 25,200, then there is a chance for another push higher. If we don't, well, I'm going to consider a move lower. Very simple, to be honest. There's not much to say here. S&P 500, we are going to, like I said, as long as we stay above this area, above the broken, this 6,764 area, then yep, I'm gonna continue targeting the upside. But if we start falling lower, and we start falling, well, let's say somewhere below this upside line right here, I think that that could be a cue for some downside. And Dow Jones Industrial Average, similar story. As long as we stay above, somewhere above this territory, yep, I'll continue pushing higher. But for the downside, a break of this upside line, probably that's what would need to be, would need to happen in order to shift my attention to some lower levels. Let's have a look at Europe, what's happening there. Look, Germany is open, and we're trading a little bit lower. I think that the market is struggling. Look at this, how well this technical picture is working out. I do like DAX, I really do. It's technically very nice. Look at this. Look at this beautiful movement here. We are struggling to push back above the upper side of the falling channel that I talked about. So we had a breakout here, but on a weekly, it looks like a nice false breakout. So beautiful as well. So on a weekly, we're still holding below this upper side of the falling channel. Overall, of course, could end up being positive because the prevailing trend was to the upside, and now maybe we could see that clearance higher as well. So the greater chance for this one right now is to break out to the upside, but a confirmation break is needed. If we somehow fall back below the 24,000 zone right there, I'm going to consider a move lower. The FTSE 100. The FTSE 100 continues to push higher. We remain above the 9,577 territory. So hey, what can I say? 5,000. What am I talking about? 9,577. This is the barrier. 9,700 is the next target, and of course, there are rumors about 10,000. Could be an interesting level, maybe by the end of this year. But let's not rush into conclusions. Okay, we're not far. Don't get me wrong. We're not far. It's not much for another 350 points for the FTSE 100. It's not a big issue. So let's see if that's going to be the case. So yeah, I talked about DXY very quickly on VIX. Look at this after beautiful, after those posts on Truth Social, when we exploded here, then yeah, they all stabilized again and now back to normal. Let's jump into the Forex world. AUDUSD pushing higher. Look at this. I mean, we're seeing, of course, AUD now is benefiting from the trade negotiations. That's the main thing. And what I said to you before as well, when looking at this pair, I said to you that keep your eyes on the barriers here because we're currently in a range. Yes, it looked like a bearish flag, but what I said to you last week, I said watch out for this area. Keep your eyes on this area, this breakout zone where this upside line, this 0.6520. If that gets cleared, then yes, I will get comfortable with the idea of a bearish flag. But what I said as well, that it could happen in the opposite direction as well. You just need a breakout here. So look, we're getting the breakout, but I'm not really in a rush, with this yet because we're testing the downside line, which is taken from the high of the 17th of September. If that continues to provide resistance, then I will say that a nice decline here could be possible. So long story short, I will consider some lower areas if we do break this upside line together with the 0.6520. For now, we're breaking the higher area here, this one right there, but I'll get more comfortable with the upside if we do stay above this downside line. But because the day is young and so are we, right? We still have to go through European session and US session, so we'll see. Maybe the US dollar could pick up the pace and we could see this pair drifting back down. AUDNZD, beautiful push higher. There we go. Falling wedge textbook scenario. If you remember, I talked about this last week. I said I warned you about this idea. Hey, it could be a falling wedge, but if it is, a break through the upper side of this would be needed, and there we go. We got the break, so I'm still leaning towards the upside. AUDJPY pushing higher. Yes, risk on all the way right now, and so far so good. We broke above the 98.42 zone, so yes, my next target is the psychological 100 tick. We already reached that, and then after that the 101 zone, maybe a little bit below that, but yeah, we reached the 100. I talked about it, so great. Let's jump into EURUSD. Okay, now with EURUSD, now this one looks a little bit bearish, to be honest, and this is where it supports the downside scenario. Now look, we had a beautiful decline on Tuesday last week, and then during the remaining days, we have corrected higher. But this is one of those formations where it's called the bearish 3 method, where we have, like, let's say a big candle, let's say to the downside, with a big body, then the subsequent 3 candles are within their body, are within the body of the first candle. So the 5th candle tends to break lower. But again, let's see what's going to happen. Certainly, we're watching this 1.1645 zone. If we do clear that, then I'll abandon this idea. But certainly, what I was just saying before about maybe a little bit of strength in the US dollar, maybe this could work out nicely. So the US dollar could strengthen, bringing EURUSD to the downside here, potentially targeting the 100-day EMA, or maybe a little bit lower. So let's see if that's going to be the case. EUROJPY continues. Now this is a different story. The Japanese yen is on the weaker side. So yeah, we're testing this key important area of resistance near the 177.91. If this gets broken, great, I'll go higher. But if we stay somehow below it, then okay. I mean, look, I will consider maybe somewhat of a range here, because again, this looks to me like a possible range like that. So so yeah, let's see if that's going to be the case. Very quickly on EURUSD. Okay, this one is looking good. I'm still targeting the downside. What I said to you previously, that if we do break this steeper upside line, I'll go for the next other steeper upside line, and so on and so on, because we have a bunch of those here, if you can see. You know, those are tentative, don't get me wrong, but so far they're doing a very good job. GBPUSD, where's my GBPUSD? There we go. Drifting lower. Now this one did break through the upper side of the falling wedge, and we did travel a little bit higher, and now we're tracing everything. So what I said to you last week, I said that if we do drop back below this hurdle, this 1.34 zone, I'm leaning towards the downside. There we go. We almost reached my target, which is the 200-day EMA. So I'm still going to aim for that, for another, maybe a better test, and then we'll take it from there. If that gets cleared, amazing, more sellers here could join in. Let's jump into USDCAD, because this is something that you need to watch out for today. We're seeing USDCAD drifting lower. We're seeing the Canadian dollar strengthening, maybe due to the fact that oil is kind of, you know, has been picking up the pace, and we saw some good action in oil, and yeah, at the moment we can see that there is going to be an interest rate decision from the Bank of Canada, however, which is not really in favor of Canadian dollar, but I think that other factors right now are working well. It's mainly the oil topic which is happening right now, because basically there is a ban on two Russian oil giants, Rosneft and Lukoil, and yeah, basically that kind of just gives a little bit more demand for the Canadian oil. So there we go. That's why we are discounting the whole interest rate cut by the BOC. Could be an idea. But now, looking at this from the technical picture, yes, it's opening the door to some lower levels. This is what I talked about. 1.3976. I said that if we do drop and stay below it, I'm leaning towards the downside. USDJPY, a beautiful hold up near this 153.27 zone. And yeah, let's see if we can get a nice little drift to the downside. If we can just get a nice move lower here. However, I'm not in a rush. I'm not going to do anything yet. So I'm going to consider something like this maybe, actually. Looking good maybe here. Yeah, something like that. So this is one of the options that could happen. And if we do remain above the upside line here, taken from the low of the 2nd of October, then yes, great, more buyers could join in. For the downside, I would say, yeah, just wait for a break of this steep upside line, and then yeah, we could consider some lower areas. USDCHF. Now this one's interesting. Now again, this is somewhat of a copy of DXY, and we're seeing, but sometimes can be a little bit seen as a little bit more volatile and more responsive to to the shifts in the economy or events, and we're seeing some positivity, to be honest. We've jumped above the mid line here in the Bollinger Band, the 20-day SMA, and in a way this kind of gives this slightly more positive outlook. But again, we're not in a rush. We want to see how the US session will go through today. Very quickly on, actually, that's it with the Forex. Let's jump into commodities, ladies and gentlemen. Gold, look at this. Look at this. I talked about this last week. So, look, basically, throughout October, I kept on saying, look, watch out for this. Be very careful. This is very parabolic, and what comes up must come down eventually. And there we go. Look at the sell-off after hitting the all-time high. Look at the sell-off we got. It's 4,380 that 4,381 almost that we reached. And there we go. We hit that. Actually, no, we hit this level right here. There we go, 4,381.5 zone almost. So we reached that, and we're drifting lower. So now the question is, can we break this upside line? In general, I think that the time has come for gold to retrace lower. Hopefully, especially if we break this steep upside line taken from the low, this 22nd of August. And yeah, look at this. Look how well it's holding. If we do clear it, the next target here for me is the 38.2 in the Fibonacci retracement, which is drawn from the lowest point of August to the actually from the low of not the lowest point of August, the low of this one, the 19th of August, to the current all-time high. So if we do clear that one, this upside line, my next target is the, like I said, the 38.2 on the Fibonacci retracement. And that's a little bit below the psychological 4,000 zone. I think if we do break this upside line, I think that, yeah, we're opening the door towards the area below the 4,000 zone. Let's have a look at silver. I mean, this is just looking very, very interesting. If this is a technical picture that looks very bearish, and after we created an all-time high, look at this. This was crazy. We hit the 54.46 zone, and then we started collapsing. And this is it happened very rapidly. Look at the monthly chart. Almost like a shooting star here. Look at this. I mean, look, I'm not going to say anything. Wait for the Fed. Maybe we could see a push back up on gold and silver. If the Fed will sound a little bit more dovish, and they will say that more rate cuts are needed, and let's go for that, then yeah, look, we could see gold and silver popping back up. But just be a little bit more on the careful side, okay? Do not rush. If you're thinking that you might miss out on a position, look, I always say like this. If you still really, really desperately want to enter a position, do it like the minimal, okay? Like the minimal exposure you can do, that's what you can do. But that's only in the case, like I said, if you really want to expose yourself in the market, which is maybe waiting for some sort of news, So, but then you have to accept the fact that if it's going to go against you, you'll have to take a loss. So, in general, you always have to take a loss, So that's part of trading. Unless you have a very good algo, which is not taking big major losses. But even an algo, still it takes losses. It's basically balancing out. Like there's some good positions, some bad positions. Overall, in the long run, it's just, is it good? Is it bad? Then yeah, it's. For now, let's look. For now, it's an interesting moment here on gold and silver, and we're watching that carefully. And because normally I would say, there is a very strong chance for this one to decline, and I'm kind of supporting that idea. However, I have to accept the fact that we're not in our usual week. We have major central banks, so there could be a lot of things said in there. Platinum, very quickly on platinum, this one's stuck. So this is where you can see that platinum and palladium are actually holding on still. Copper is just flying, but copper is flying because of the China US deal, and I think that there could be some more upside. Cocoa. Now, cocoa, one of my favorite ones here as well, and look at this beautiful thing here. So it rebounded from this downside support line, which shouldn't be drawn this way, but anyway, downside support line, and we rebounded from that. So the question is, can we stay above it? And something tells me that yes, in a way, if we do stay looking at this monthly chart, if we do continue to trade above this downside support line and the 50-day EMA shown as the green line on our monthly chart, then yeah, there is a chance for this one push back up. Sugar dropping below 15. There we go. Look at this move. Now, look, with sugar, I do like sugar. I do see potential in it, but I think not yet. It seems like we need to wait for some better news, some better times, and we need to wait for that little reversal before, let's say, considering maybe a possible move back up. Soybeans, of course, rallying. Guess why? Because again, you know, China-U.S. talks, and there could be progress that, you know, soybeans are going to go back. The U.S. soybeans are going to go back into China, and you know, we're seeing, you know, the price here picking up. So I think that there could be more upside unless they will somehow come out this week and say, you know what, the talks are not happening because we cannot agree. Boom, this could reverse back down nicely. Oil, okay, oil is correcting back down a little bit, but it had a great run. So WTI oil rallied, pushed above my $60 mark. I said to you that my next target is this downside line, but I'm not really getting very comfortable with the upside yet because look, there is still a problem with demand, especially with China. However, if the deal comes, you know, we do see this deal signing, then that means that maybe, you know, China could see this little a bump in demand inside the country. Maybe, you know, some progress could happen. However, again, I think that this is where we're trying to put bandage on a leak. You know, on a leak where there are issues, and of course time will tell, don't get me wrong, but I don't think that demand is like it's fixed on the global arena. Brent oil, yep, we're seeing a little bit of a retracement back down, but somebody might say, hey, but could we be forming somewhat of an inverted head and shoulders? Left shoulder here, head, right shoulder. Could be the case, don't get me wrong, but let's not rush into conclusions, okay? That's something for you to consider. Natural gas. Now look, natural gas, I do have a little bit more faith in natural gas because it's a little bit cheaper, and you know, this is what's kind of powering electricity creation right now as well. So, you know, and the electricity is much needed right now because of all the AI deals. So they need to get some electricity from somewhere. So natural gas is kind of also one of those options. And finally, for dessert, ladies and gentlemen, Bitcoin Cash. Look at this, boom, back to the upside, back up above the 114,000 zone. I talked about it last week. I said, look, maybe we're, you know, if we do climb back above the 114,000, great. I'm going to consider a move to the upside. However, if you're not really comfortable with that idea, then keep your eyes on the 116,000 as well. Again, if that gets cleared, also more buyers could join in. But at the moment, as long as we stay above the 114 territory right here, I'm going to continue targeting the upside. Bitcoin Cash pushing back up. Look at this break. Okay. This, I was really hoping to see a better falling channel a little bit, but okay, that's fine. But in general, the idea worked out because what I was saying to you last week, if you remember, and I also, did I do the quick little crypto update? There we go. This is the one that I did last week, so you can check it out. Basically, I made this call. I said, look, we're forming something of this is one of my favorite patterns where we see a big decline, then a gradual decline, and then we basically pop out higher. And look at this amazing thing. Ripple, similar story. Ethereum, similar. Okay, this one was forming a triangle. Litecoin, boom to the upside. It reached my target of 100. Dogecoin, amazing stuff here as well. Pushed higher. Polkadot very quickly also cleared. There we go. Pushed higher. Tron. Now Tron is a different game. Now one of my favorite cryptos right now. Why? Because it's very technical and it's very currency-like trading. This is what I like to see, to be honest. And in cryptos, if they want to be currencies, of course, if they don't want to be like just assets. Well, actually, some currencies will be assets, some you know, like commodities. Actually, commodities are stocks, and some cryptos will be like currencies. That's inevitable. I think this is where the future separation could happen, you know, like in how the future separation could happen. I think that the crypto world will have a kind of a more specific look, more of the regulation. Something that should have been decentralized and deregulated will get more regulation. You know, this is what the crypto world was fighting for, right? Right. Anyway, so long story short, for now, it's what's interesting here is that Tron is behaving like more of like a currency, and there we go. We had a decline, then we had a range here. So this formation looked more bearish than bullish, and there we go. We got the move. Polkadot, all these other ones, they moved higher. So for now, look, I'll say it this way: with Bitcoin Cash, we have another downside line, which is a little bit of a problem. If we clear that, great. I'll go to the upside. XRP USD. So if we do break the upper side of the falling channel, great. My next target is the 200-day EMA. Ethereum is interesting here as well. It remains above the upper side of the triangle. So long story short, if we do clear this barrier, the 4,275, then yes, great, more buyers could join in. Litecoin, interesting developments here as well. So what can I say? For now, it's we're testing this key area of resistance of the 100. If we do clear the 100, yes, more upside could come. Dogecoin, similar story. So keep your eyes on that one. Very carefully watching this again, because if I am expecting the US dollar to strengthen a little bit, maybe this could bring back the cryptos back down a little bit. Anyway, ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. I hope you found it useful. Thank you all for tuning in and watching this one till the end. I really appreciate that. Too bad that there were no questions, but you know, hopefully maybe next time there will be. But as always, ladies and gentlemen, thank you for your time. For those who are watching this live, I really appreciate that, and for those who are watching this as a recorded session as well, I also appreciate that. And look, stay tuned. Don't forget to subscribe to our YouTube channel for more videos like these, which are coming out occasionally. I'm doing these on separate topics, and watch out for these videos to come out again. So. And for that, don't forget to subscribe. Thank you very much, ladies and gentlemen. I shall see you next time on Wednesday. Yes, on Wednesday. See you later. Bye-bye.